Avino Silver and Gold is a silver, gold, and copper producer listed on the Toronto and New York stock exchanges, with an existing operating precious metal mine in Durango, Mexico. It is a junior miner with firm plans to become a mid-tier producer by growing its annual production from 2.5 to 2.8 million silver equivalent ounces to 8 to 10 million silver equivalent ounces in 4 years. Avino will do this by bringing on production from a new ore body, La Preciosa, which is nearby to its existing Avino mine and mill processing operations. It will also boost production through its planned oxide tailings reprocessing project. Avino has a market capitalization of approximately $450 million and has a strong operating record, healthy balance sheet, as well as a path to significant growth. Avino presents investors with exposure to an attractive and under-recognized growing precious metals producer. Here are 5 key reasons why Avino is an exciting investment case. First, Avino offers silver and precious metals exposure. Precious metals have outperformed most asset classes of late, recovering their safe haven status in a world of inflation and broader uncertainty. Avino is projecting a commodity split of 49% silver, 19% gold, and 31% copper in 2025. Silver benefits not only from its status as an investable precious metal, but also due to its growing demand in a wide range of consumer and industrial end uses. For example, its use in photovoltaic cells, which accounted for 19% of demand in 2024, up from 7% 5 years earlier, which helped drive the physical silver market into deficit. Silver prices are up 11% year to date, and are now less than 1% of the gold price, which is a record low. Secondly, Avino has a clear path to transformational growth. Avino has plans to grow its production by a factor of 4 in 4 years. Its plans include silver production growing from 2.6 million equivalent silver ounces in 2024 to 8 to 10 million equivalent ounces by the end of the decade. Most of this growth will come initially from the development of its nearby ore body, La Preciosa, which is just 19 kilometers from its existing Avino mine and mill processing operations. La Preciosa's development is fully permitted and is underway, with blasting of the decline already started. Avino also has a new jumbo drill that is developing the San Fernando haulage ramp towards the Gloria and Abundancia veins. Thirdly, Avino is well-funded. Avino reported a $27 million net cash position at the end of 2024 and reported $18 million in EBITDA in the same year, up from $2.5 million in 2023. Avino's all-in sustaining cost of production for the first quarter of 2025 was $20.1 per ounce, just 60% of current silver prices, and cash costs of $12.6 per ounce, just 38% of current prices. Avino aims to get to 8 to 10 million ounces for less than $100 million worth of investment, which looks achievable without highly dilutive rounds of fundraising. Fourthly, its growth will be low-cost and highly value accretive. The commencement of mining at the La Preciosa deposit doesn't require Avino to build a new mill or new tailing plant, and the ore body is accessible by a dedicated power line and paved road. Its oxide tailing treatment project has a 26% post-tax IRR and 3.5-year payback period according to its pre-feasibility study. These are at price assumptions of $23 per ounce for silver and $18.40 per ounce of gold. Any actual production is expected to outperform estimates contained in that pre-feasibility study, assuming consistency of current pricing. Finally, Avino is cheaper than its peers based on resources. Avino has 371 million silver equivalent ounces, which is enough for 142 years production at 2024 rates, or over 40 years at its expanded rate. On an EV to measured and indicated silver resources, the market values Avino at approximately $1 per ounce, well below many of its peers. On a silver equivalent basis, Avino is trading under $1 per ounce, well below many of its operating peers, and not dissimilar to silver producers not yet in production. For a company with a long operating history and firm path to accelerating production, this looks like an anomaly, and it appears that the market is yet to price in Avino's transformational growth. Avino is a high-growth, established silver producer heading towards mid-tier status with a pathway to quadrupling its production by the end of the decade. For more information on Avino, please visit the Edison website.